on shortly. And now we're live. All right, ladies and gentlemen, welcome to the Superlative Podcast. I'm Edward Bushi. One guest, no edits, no post production, just a sharp live conversation about what it really takes to get to higher levels and what comes next. So let's get into it. Sebastian, I just want to say a big thank you for joining us on this call. Sebastian Harris has built a fund that uses global commodity shipping to solve the one problem every VC knows, but not a lot of people fixes. And you can, right? And he's also investing in funds that are values based. That also resonates with me personally. So yeah, before we start, thanks for joining, and would love to you know get into it. Like, what is Sandbox Fund? And before we start.
Yeah, it's great to connect. So Sandbox Fund it's an evergreen fund that we put together in the last couple of years, where we focus primarily on trade finance. And trade finance, for those who don't know, is a lot of commodities get shipped around the world all the time. Think jet fuel, lithium, soybeans, critical earth minerals, all kinds of stuff get shipped all around the world. And to do that, there's several mechanisms that help facilitate the capital to do that. And so we built a fund around that, and it's going really well so far. Yeah,
Yeah, happy to hear that. So
yeah,
yeah, you take us back because on our onboarding call, you told me that you're from New Zealand. You can tell from your accent, but yeah, then you started building a multi-million-dollar public company. Now you run a fund. Like, how did it begin for you?
yeah. Thanks for asking. So yeah, I was born in Sydney, Australia, and it's where my parents were in when I was born. They're from New Zealand originally, and so I was about 18 months old when we moved back to New Zealand, and most of my life growing up in New Zealand, which is great. Looks exactly like it does in Lord of the Rings. It's no joke.
Yeah.
So, they did such a good job on that, which is awesome. I grew up about 45 minutes away from where they filmed the Hobbiton movie set, so where the hobbits are from in Lord of the Rings, which is cool. But anyways, moved to the U.S. about 11 years ago. Followed an American girl out to the U.S. and kind of didn't look back, and enjoyed the world of entrepreneurship that's possible out here in America, and leveraged that to jump into a couple of different things. We did some nonprofit stuff earlier in the career, focused on some geopolitical relationships in the Middle East, and helping try to create pathways to prosperity and peace through business, which is really really interesting concept. And I was really challenged in the midst of all of that to take that emphasis and actually go do it myself. And so let's see what we can actually do with business, and see if we can actually transform the world through commerce, through entrepreneurship, and through business. And so that's what we got started doing. Started a couple early companies. One of the first one was kind of a values-based education play for faith-based entrepreneurs to get them involved in businesses. And we got to seven figures in 6 months, which was amazing. Of just people in the hunger of trying to figure out, how do we do business that transforms the world, and how do we actually do something like that, which is great. So that went really well. And then early 21 started a company with a friend of mine called Public Square, which was a values-based e-commerce platform turned fintech marketplace. And that one it just went so fast. It was a rapid pace, really really fast. I think we were from inception to IPO was 2.5 years, and we exited
Wow.
into the New York Stock Exchange at I think it was a $350 million market cap at the time. And yeah, it was just a wild journey of building systems, scaling them, meeting needs of clients and other entrepreneurs that we were supporting at the time. And that was a pretty wild journey. And then after that, started to get the itch for building and stewarding capital that moves the needle on culture. So kind of taking the next logical step, like we can prove we can do it in business.
Mm-hmm.
What would it look like for us to empower lots of entrepreneurs to go and do that? And so the natural path to that is capital platforms that move the needle to shape culture through capital. And so that's primarily what we do right now. We've got a lot of work in the trade finance arena. We have some stuff in real estate as well. That's really exciting, helping develop cultural centers and multi-family units that actually use cultural innovators and developers to reshape the culture inside apartment complexes. But then also we have a real passion for early stage venture capital from a faith-based lens, and how do we help faith-based entrepreneurs really get structured and secure on their journey ahead, and the mentorship, quote unquote discipleship along the journey, to be able to make sure that they can get to scale, but without compromising their values when they get to the top. And that's a big part of what we do at the moment. So, yeah.
That's pretty interesting. I want to get into like you help founders not compromise their values, but I just want to say before we go into that, like I love the transition where you were doing activist, almost activist word, and layering that with business acumen, and then helping in a non-profit way. I love the transition to actually then building a business, and then transitioning again to like building businesses like what you put together. So like it seemed the clip of it was really fast too. So a 2-year IPO. Not a lot of people think that fast. So congrats.
That's true. Yeah, it was a wild journey.
So one of the things that you struck me in the onboarding call before this, right, was you're talking about value-based founders come across as, you know, very emotional, but they're mission driven. Like you in particular want to like target these kind of personas, these kind of like founders. Like what's the unintuitive thing about them? What do people like not see?
Yeah, I think to take the cap off for a minute, like the world of faith-based founders is an interesting one.
Yeah.
Because when you unpack like where does your idea come from when you're starting a business, it all comes down to like there's some kind of idea that sparks the momentum to build a business, or some kind of mission around whatever that idea is. You know, it might be helping end doom scrolling in young people, because it's like the stats are crazy. Every 8 seconds around the world, a young person commits suicide because of social media harm, you know? And so, but it's going to be impossible to force people off those platforms. So the crux of the problem is, how do we scratch the social media itch, but do it in a safe environment? That's an interesting problem to solve, but it comes deeply from a conviction that is, you know, very spiritual in nature, very biblical. We have to protect the lives of the children in our lives in order to secure our generational future. And it's just the right thing to do, to help create safe environments for young people to do social media, but also to do it safely and be away from predators and be away from negative content and things like that. And so founders in those kinds of spaces, especially when they're faith driven, have like this internal, deeper core motivation that we have to get this mission done, because it's more, there's a whole lot more conviction that happens at that level when it happens at a deeply spiritual level. You see it at a soul, mind, intellectual level, but then physically you're seeing the problem every day, especially when you have kids and watching them try to navigate the social media space. So it's just like one example of like that core conviction is actually incredibly motivating. And they're the kind of people that will dig deeper than other entrepreneurs. Like I've met entrepreneurs like up in Silicon Valley and stuff, and they're great, very passionate people. But then, you know, they have one idea and they work on it for 18 months and it doesn't work. And then they just pick up a new idea, because the level of conviction, actually one of the problems is that the level of conviction actually wasn't deep enough to navigate that. That problem is solved with faith-based founders, because 9 times out of 10, the conviction about what they're building is actually a lot deeper in the conversation than other founders or entrepreneurs. And so that's why I like working with them, because we have to solve this problem even if we pivot, even if we change, even if it ends up looking totally different than how you started, that core conviction becomes really important for entrepreneurship. And so, does that make sense?
Yeah. I mean, like that's really fascinating because I originally assumed before coming into this call, like maybe you follow or resonate with these founders because they have a really good work ethic. But it's deeper than that. Is
Yeah.
what you're calling out.
Yeah, I mean, that's a good point too. There's definitely a strong work ethic, but I mean, you can find strong work ethic anywhere, right? I read a story recently about a lady who's working at SpaceX, and
Yeah.
she was leaving. Maybe you saw this too, but she was leaving the office at 10 o'clock at night to go to the gym for an hour, and then you would have thought that she was going to go home after that. She was going back to the office after working out at 10 o'clock at night. So you can find hard work anywhere on a mission conversation, but for me, it's the conviction piece that's underneath that drives them to a stronger work ethic. That's really critical.
Nice. Yeah. That's really really insightful. I also like the angle where you're talking about like social media, but that's more healthy. I chatted with another podcaster earlier or last week, and he was talking about how young kids, right? People, their brains are very plastic, right?
Yeah.
They can absorb things really well, and it's where habits can be formed really early, and it has to be the right habits. So even thinking that early is really good for a founder to have.
Right.
Yeah. So, would uh, that being said, would love to like get into like some of the projects that you uh, are backing, right? Because like what I can imagine that these founders are in many different verticals. It's just the internal conviction and admission is just the same thing or the across
Yep.
the board.
Yeah. Happy to dive into that. So, oh gosh, where do I start? Well, let me start with the social media one because that one we
Yeah.
talked about that. This is a friend of mine. His name is Nick Rottola.
Mm.
He had the idea to start a new TikTok competitor called Up. The name is Up. It's about to be released into the App Store in I think about a month or two. They're nearly there. They're at the ready to roll.
Yeah.
Which is great. But essentially, they designed around the problem that every 8 seconds a young person commits suicide from social media harm. Every when a young 13, 14-year-old girl downloads TikTok for the first time, she's shown over 10,000 weight loss videos in the first 2 weeks. So that these platforms are discipling and shaping the lives of our young people, whether we know it or not. And in reality, the fruit of all of that is demonstrable harm. And so, they stepped in to solve the problem. What they've done is they've flipped the algorithm of the app on its head to be designed to send you to and work you towards things that make you happy, things that are more peaceful, things that inspire you, things that are hopeful in your life. And so, as opposed to, we've all been down the doom scrolling brain rot. They did some
Yeah.
brain studies and they showed that on scrolling TikTok actually gives you a negative valence inside your brain state. And so what that means is that when you're just doom scrolling like that, your
Yeah.
brain is actually in a negative state. And so you're just receiving all of that stuff straight into your subconscious before you actually are thinking about it. And so they're going after solving that problem. They just closed a massive round and they're off to the races, which is really cool. So love the conviction to solve a massive problem there. Another great founder, his name is Cam Richardson. He runs an organization called Pay Squad. And what they're doing is they're trying to end the buy now, pay later debt side of things by doing buy now, pay together. So think about a big purchase you want to do with friends or family or things like that.
Oh,
Instead of
interesting.
actually like going into debt to be able to pay for something like that, you share the burden around your community and then leverage payments as a group, as opposed to,
Yeah.
which is fantastic. And we've all been in a place where you put your credit card down in a restaurant to whoever wants to get the points, you're chasing everybody out to pay you back. Like that's
Yeah.
a problem, right? And so they're going after that market, which is really cool. Another great founder up in NorCal, he is in the medical device space, and what he does is he's created a wireless tourniquet. A tourniquet is a cuff that goes around the limb if you're doing orthopedic surgery to stop the blood flow, so they can actually operate on the leg or arm or whatever that is. They're all currently wired. And so in the operating theater, that creates a lot of chaos with wires flowing around in different places. And so he's created a wireless one that works. So simple idea, super effective, getting to mass market at the moment. So there's all these people have like real conviction around solving really interesting but diverse problems across the board, which is really, really fun. Last one for you before I'll hand it back to you is one of the big problems in American infrastructure at the moment is actually our water grid. Like the energy grid gets a lot of attention because it is because of the strain on it from AI and growing emerging cities and different things like that. The water grid is equally
data centers.
Data centers, of course. Yeah, of course. And so they're getting a lot of attention. What's interesting is that across the Southeast and some of the North, Midwest, there's a lot of water treatment facilities that have boil water notices. They're defective water treatment facilities that were built in the 50s and not producing clean drinking water even for homes. And it's ironic to me, that we have all these conversations about getting clean drinking water to people on the other side of the world, when in America, we don't have clean drinking water in various different regions of the country. And so that's an aging infrastructure problem that is a solvable problem in America, and leveraging capital to do those kinds of things is a solvable issue. But it's just not being addressed as aggressively as it could be. So there are some people doing it, but there's a huge need out there for entrepreneurs to step in and have conviction about this kind of a problem to do that. So those kind of some of the things that we like and are invested in on the venture side, and that's fun. So
yeah, I can see where the mission comes in, right? Because like you really have to these are kind of hard problems. They're not just deep tech problems, right? They're more like getting stakeholders to help out as well, or getting how to say, partners to like join in and make the product successful. So one thing I want to dive into also is the how your fund also operates, right? So the model that you have is really, really interesting. How I characterize it, I would love to have you expand on it, is that there is a business model to be made in helping cargo be shipped to other countries, and in that somehow that business seems so unrelated is part of the venture side. How does that work?
Yeah, good question. Good question. So for us, it started out of this idea of like, how do we help founders in their core problem when we want to build a fund? That's great. There's plenty of funds. So how could we do something that's actually meaningful and different and differentiate ourselves inside the market? And so that was the core question.
Yeah.
Then we started to look at some of the problems. And so number one, the founders of companies are in a massive pressure cooker all the time, especially after you've raised money. And so what happens usually is you have the founder down here at the bottom, and they have a marriage to take care of, kids to take care of. They've got a team now to take care of, and all of those things. And then they have a board, and then they have investors. And when you get investment from a fund, the fund itself sits up here above the founder. And then the fund itself has to go and raise money from other investors up here. And so these investors up here place pressure on the fund to perform. And then the fund turns around and places all of that pressure on the founder. And so the founder is sitting in this like pressure ecosystem of capital. And that is that pressure dynamic, and getting overrun and getting burnout in places like that is where compromise starts to happen. So if you feel all of the pressure from that stuff, then you're more willing to perhaps cut corners, take an easy kind of path over here that has consequences over here, and then creates chaos in that environment. We see a lot of founders who, like, their marriages, for example, really, really suffer as a result of, well, they've got this business and these investors and the kids are demanding, so they get all the attention. So these marriages after the business just fall apart. Like, really common for that pressure to do that. And so we wanted to envision a model where the investors up here would get a return from the fund through some mechanism, whatever that mechanism was, that helped us then provide capital to the founder, but in a less pressure cooker way. And so we then become the mitigator of the pressure as the fund, as opposed to the way we do that. And so what that turned into is us building a fund around the trade finance, private credit type of investments that recirculates capital to the investors in a dynamic that we can go deeper if you want, but that the investors make money in that way. And then we, from our carry, from what we make on our side, we then redeploy that into early stage venture capital. So we get to do it from a relational side when the money's already being made up here, and then this becomes a cherry on the top. And then we have investors who also come into those venture deals, but they do it from a way where they're already making money at the top. And so that was part of the problem we wanted to solve. The interesting part about solving it like that is it also solves a liquidity problem for venture capital investors. So liquidity meaning that when you, as a venture investor, you place capital, and usually it's gone to be working capital inside of the business, and it could be 10
when you
years.
say a venture investor, are you talking about the middle layer or the top layer?
Just a different layer of investors completely.
Okay.
Like, traditional venture capital is designed so that the capital just goes and it goes to the company, then they spend it, and then they have to go and raise more money to spend it and go through that route. Now that investor's money has been deployed and used, so it's not sitting there that could be returned at any point. And so there has to be some liquidity moment, some kind of exit, acquisition, an IPO, secondary sale, whatever it is, in order to be able to do that. And so that means that the business has to be successful. And so that's why, venture capital is inherently more risky than, traditional private credit or even private equity or different things like that, because it's in a lot of senses a gamble. Like, is this one that you're investing in going to actually pan out? And so, does that make sense?
Yeah, the when, as an investor, you put money in a fund, the fund gets like locked up, but it's not liquid for a while, and
Right.
The time horizon for if it ever happens, pretty long, like to get a payout or a liquidity event, right?
Exactly.
It's long, and it's not necessarily likely.
Yeah.
So I really like how you're it's actually very shrewd, the way you put together that model to help founders, right?
Yeah.
I wouldn't have thought about it. I wouldn't have thought that it's a value for investors to think that way. Like, I mean, want to put it back to you. Like, why don't you think investors think this way? Other investors think this way too.
I think the financial markets are very traditional in terms of their mindset, and it's very disciplined, right? Like, and for good reason, right? There's a lot of protections around investment dollars because, there's been a lot of scams out there. There's a lot of regulation around it to keep investors safe, and that's really important, and as the SEC and FINRA and all the regulatory bodies involved in these kinds of things are looking at this, they're looking to help keep investors safe so people don't lose money, and if they do, then it's done in the appropriate way. And so because of that, I think the finance world is very traditionally disciplined in its approach. I guess I'm an entrepreneur at heart, and so I like solving problems and seeing problems and trying to find solutions to those problems, and seeing if we can make something work around them. So that's, I guess, why. So
Yeah, I really like that new angle. I've been learning from like other VC investors. They're talking about like uh, they gave me a deep rundown of how uh, about how startups need what's the name of the offtake agreements instead of LOIs because they're much more powerful. They're bankable. Another investor taught me about um, crazy mergers and acquisitions before the IPO even starts. That's between hedge funds and them playing, and that's why we get crazy valuations like OpenAI, for example.
right.
And now from this call, like you can even go granular and more sophisticated, where you're releasing pressure off of the, the both sides on top and the bottom layers, so the founders and the LPs.
Yeah.
So it's pretty. It's all about like design. It's like I'm wondering like how does someone like you like discover these kind of things?
I mean, I think it comes down to just an innate curiosity around what are people's legitimate actual problems. I think, and I think in general, the finance markets, Wall Street are
Mm,
very transactional in nature. It's so much
yeah.
about like the movement of capital and making more money. That's when you boil it down. Like early on, we had an advisor basically say to us, there's only two ways to grow a capital firm. It's raise more money or perform better on the money that you have. It's kind of that. The irony about that sentiment is that it doesn't leave much room for creativity. And so the conversation around like, what if capital and money was designed to actually be able to be useful and solve real world problems first, then be about making money as a secondary offset to
Uh,
solving the actual problem first. And so that's what motivates me in general is like, yes, the money's important. It's a tool to be able to do more impact driven things, but at the core of it, money is it carries weight to it. There's a value that's placed on money, and the people that you engage with money are
expectation.
important to discern through, right? And so in that, I think there's a lot of room for diversified, nuanced conversation around where can we place money that has actual real world impact, as opposed to just thinking about whose back's getting scratched and whose pockets getting lined in the process. And that there's meat there, I think, to pick apart and work through.
Yeah, that's really really good. So yeah, I wanna I wanna throw this last question with you, and this has been a very like really really like eye opening conversation. It's all about releasing the pressure to make money, to make more conviction bets that really solve problems. Like you take away the mental pressure of making money, easing that, you can really solve problems. I like how this mechanism is designed. So before we close off, right? I just want to throw this question out to you, and you could disagree or push back, um, but I want to see where it lands. So the fund exists because you believe values-driven founders are being systematically mispriced by the market. If that mispricing gets corrected in the next 5 years, what does Sandbox Fund look like when everyone else figures out what you're doing and what you know?
Yeah, good question. I mean, I think I've been thinking about that a lot recently, and here's the honest truth: the largest shareholders of BlackRock are
Yeah.
Vanguard and State Street. The largest shareholders of State Street are Vanguard and BlackRock, and the largest shareholders of Vanguard are BlackRock and State Street. And so, what blows
It's
your
a
mind
circle
about
jerk.
it is, yeah. And so, like, what blows your mind about that is that like they're really shifting capital around each other in an ecosystem that helps grow their net valuation and then grows their impact in the market. And so because of that, that's really So if you're looking at a pure economic dynamic, that's a really good thing because it shows, number one, healthy competition, but also collaboration between different funds and the market. And so real success for this idea is actually looking like other great people doing similar things to really help solve some of these market issues. And so I think that doesn't scare me at all. It actually encourages me because I think the mission is more important than the actual
Yeah.
financial transaction. And so if that becomes the situation, then that's a big win. It means that culture is following, that the finance markets are following where the cultural movement is, which is to do less extractive founder engagement and more capital flowing to mission driven organizations that are solving real world problems in the first world in the West that outshapes culture for the rest of the world. And so I think if we can do that, then that's a massive win. I'm not the kind of guy that needs to be the guy at the top of the mountain calling the shots. I want to see the collaboration between people help grow and build and facilitate interconnected relationships that solve problems at scale. And so that's a win in my mind. I don't know if that's what you were expecting my answer to be, but that's my answer.
No, I mean, like, I was open to any take, and I really appreciate that. Like, the kind of model that you're doing right now gives good founders the chance to, like, get recognized and solve their mission. So I really resonate with that one. So,
Cool.
Sebastian, just want to, before we close off, how do folks reach out to you, and if they want to, like, learn more about your fund and your model and the founders and your portfolio?
Yeah. I think LinkedIn's the best way to do that. I'm on there fairly regularly. Reach out to me there. We can get a conversation started. So
Nice, nice. All
right
right,
into
I'll.
the DMs.
Yeah, good thing that this stream is live on LinkedIn as well.
Cool.
Yeah. All right. So, Sebastian, thanks for your insights and your leadership in the VC space, helping founders. And yeah, would love to, like, have you on in the future talking about new projects as well. So yeah, we'll keep in touch. And Sebastian, thanks again.
You got it. Thanks, Edwin.